So I'm just going to start by doing an acknowledgement of country. I would like to begin by acknowledging the traditional custodians of the land in which we are meeting today and pay my respects to the elders past, present and emerging. I extend that respect to the Aboriginal and Torres Strait Islander people here today. So a bit of housekeeping as well that we're starting with. Yeah, come on in guys, grab a seat. There's seats over there and there. So a bit of housekeeping. We all have collected our wonderful lanyards. Don't forget to download the conference app via the QR code in the back of your name badge. There you can add your bios, connect with other attendees, see the agenda for the day, the floor plans, and schedule meetings. Don't forget there's also a Wi-Fi network and password if you want to kind of utilize that free Wi-Fi. Now, there are multiple coffee carts in the foyer, which you probably have already had a chance to go past and grab a coffee. They are brought to you by Zaya and Minerva and Pennant. So we can thank them for that kind of caffeine boost. And then there's also the exhibition area. So don't forget to check out our amazing exhibitors this year in the exhibition area. You'll find the Pennant's coffee cart, Messina ice cream cart that's sponsored by Minerva, the NFC business cards from VEP, which are unique business cards you can use to connect with other attendees. You can see the interactive LED wall as well. Now, the toilets are located just behind the registration desk as you are kind of coming towards this room. And in the unlikely event of an emergency, please follow the floor directions of the floor wardens and the green exit signs as well. Don't worry, we're going to zoom past all these other stuff. So I'm just going to say a quick thank you to our sponsors. Without them, Intersekt would not be possible. So thank you to our presenting partners, Victoria State Government, our gold sponsors, BC Payments, silver sponsors, MasterCard and Visa, bronze sponsors, Australian Payments Plus, digital sponsors, Xero and iGo. And a big thank you to all of our other sponsors. You can check them out on the app and connect with them there. And lastly, don't forget to use the conferencing hashtag Intersekt24. Okay, cool. Now we're getting into our first session finally. So we have our first session, which is exploring the evolving world of lending. Imagine a future where everyone's borrowing journey is seamless, efficient, and optimized for their needs. Today we're diving into how technology and innovative strategies are reshaping this process. Our group of experts are at the forefront of this change. And so I'm delighted to introduce, our wonderful panel. So I'm going to take it away. To Craig, who's moderating the session.
Absolutely, no, thank you, and good morning, everybody. And first and foremost, thanks for finding stage 2. We were getting a little worried that we thought it might have been a couple of people, but you found them, and we filled the room, which is awesome. So, and welcome to the fellow panelists. Look, optimising the borrower lifecycle, that's what we're here to have a conversation about this morning. But just importantly, we'll go around and just get everybody to introduce themselves, because I think there's sort of a diverse, different in roles and businesses, and that'll sort of intertwine into the conversation that we have this morning. So Satish Wadhwa from Pennant. Satish, you maybe just introduce yourself and a bit of background.
Yeah, thanks, Craig. Good morning, everybody. I represent Pennant, which is essentially a loan lifecycle management platform focused on digital servicing post-settlement. We're a lending core platform present across 35 clients in international markets, newer to Australia, but the focus for us is to really look at the borrower lifecycle post-settlement.
Beautiful, thank you. And Ruth, good morning from Moneycatcher.
Thanks, Craig. My name's Ruth Hatherley. I'm the CEO and founder of a company called Moneycatcher. Our products stride in the market, and those products are for anyone in a origination space for home lending. Typically, we work with brokers and aggregators, and we also work with comparison site organisations who are dealing direct with consumers to be able to make decisions around lead qualification and product offering, all the way through to understanding how to manage their trail books and the ongoing customers in their loan book, to identify risk and opportunities to make sure that consumers are always on the most competitive offer available in the market.
Fantastic. Thank you, Ruth. And Simon, good morning. Simon's will bring that product lens in from Newcastle Permanent.
Yeah, hi, my name's Simon Deitchis. I'm the head of product at Newcastle Greater Mutual Group. For those of you not familiar with NGM Group, you may be more familiar with our retail brands, Greater Bank, and Newcastle Permanent Building Society that recently merged about 18 months ago now to become one of Australia's largest customer-owned banks. We've got around about 630,000 customers and growing, and we offer the full range of, consumer banking products from home loans, personal loans, credit cards, everyday banking accounts and saving accounts. Looking forward to unpacking this topic, having spent a large part of my career in lending and product management. Thank you.
Beautiful. Welcome, Simon. And last but not least, Gloria joins us from Wiser.
Yeah, hi, I'm Gloria Chan. I'm head of UX at Wiser, and for those who aren't familiar with Wiser, we're a non-bank lender based in Australia, and we serve Aussies all over Australia, providing personal loans for any worthwhile purpose is what we describe it as. So, car loans, home loans, if you want to get a jet ski. And we help them on their financial wellness journey to help pay back that debt. So looking forward to our chat today.
Beautiful. Thanks, Gloria, and thanks, everyone. Optimising the borrower life cycle is what we're going to have a conversation about, and we caught up on Monday, and it was interesting. I feel that we could probably talk about 3 to 4 hours about this, but we've got 30 minutes, so we'll keep it pretty tight. But maybe just to kick off, and as you see, there's different roles, different sort of understanding within the business. So maybe Gloria, kicking off with yourself, optimising the borrowing life cycle. What does it mean from, I suppose, the user experience side?
Yeah, so from a user experience side, optimising the life cycle means whether you like it or not, every experience and interaction that your customer has with your business, your product services is designed. And that's essentially how we look at it. So when we look at customer life cycle at Wiser, it's how do you design those experiences so that you're helping the customer to move from awareness right through to ideally brand advocacy. So we use design, obviously connected with commercial viability and technical feasibility to make sure that experiences are delightful and also work for customers.
Absolutely. Thank you, Gloria. And Ruth, just probably building on that from your perspective, overseeing, you spoke a little bit about introduction, that full end-to-end, but optimisation, what does it mean from a money catcher perspective?
We deal mainly in the residential mortgage space, and I think there's two parts to the answer from me on that. One is that the CDR legislation, the Consumer Data Act legislation, has given a beautiful tool to be able to optimise mortgage product offerings and the ongoing monitoring of those mortgages with the product reference data and also access to the consumer data. So we leverage both of those. So our vision around optimisation is an always-on monitoring of a customer's home loan to understand that they're on the most competitive offer available to them. Yep. So 70% of the consumers in the country in Australia choose brokers as their trusted advisor to be able to obtain a home loan because it's a very complicated process and they place their trust in that broker. What has traditionally happened prior to the CDR is that there's only been a way to statically look at that home loan. So you go through a significant investment of choosing what is the right home loan for the customer, but to the broker, the ongoing management of that loan is often quite opaque because there's not all the information that broker needs to get back from the lender or from other sources about that loan. And therefore, they're contacting that customer once, twice, possibly 3 times a year. And for those other, that's 5 days of the year. For the other 360 days, how do you know whether the customer's on the most competitive offer? And so our view of optimisation is that you know what the most competitive offer is 365 days of the year. You are proactively alerted when that customer may be at risk of not being on the right offer. And then you are provided an opportunity to outreach to that customer, which then the consumer feels like that they are having the most optimal experience for the entire time of that loan.
Yeah, absolutely, yeah. Well, and Simon, we're talking a little bit about over there, you're talking about the digital home loan from a Newcastle Permanent perspective and how people are also being drawn to that. It probably builds on a little bit what Ruth was saying there.
Yeah, we've spent a big part of our time over the last 18 months building and launching a new digital direct home loan where customers can apply for a loan 24 hours of the day, 7 days a week from a time and place that suits them. And they can do that in as little as 10 minutes. And the way we've really made it easy for customers is to be able to digitally capture things like their income, expenses and liabilities, so we can pre-populate a lot of the form for them. They can review it and change what they don't think is right. And it's really meant, we can tap into a new market for those customers that don't necessarily want to speak to a broker or a bank lender. It's really pitched at refinances at the moment, but it's a really easy and quick way to get into a home loan and making sure you're getting a great deal. Yeah,
absolutely. No, thank you. And Satish, coming from a platform perspective, and we were speaking on Monday, look, not just the origination, but that full end-to-end life cycle. How's that sort of driving the innovation around platform?
Yeah, Craig, I think I come from the boring end of house at times, right, given that we're more middle and back office. I see the optimization of the borrower lifecycle on two fronts. One is an opportunity, and the other is a responsibility. So I'll talk about the opportunity first. I think the market for a long time has spent a lot of time looking at time to yes and time to cash. I think in the current times that we live in, we've got to look at time to serve and cost to serve equally well. I think there's a bit of lopsidedness on the first side of the value chain. So it's great to see that there are players today in the market that provide that opportunity, where you can take a full end-to-end view of the life cycle. So I think optimizing the life cycle by looking at the middle and back end of the house is equally important, and I think the present times are going to get to that. What it also leads to is a responsibility that I feel we carry as catalysts and service providers in a fintech ecosystem. With the amount of API integration that's possible across platforms today, there could be opportunities for us to leverage what's happening on restructuring and hardships management, and pay that back into what MoneyCatcher could do from an angle of being able to offer more competitive offers to the customers as well. So I think there's opportunities for us as players in the industry to get more API integrated, so that the borrower then sees the full end-to-end life cycle experience for themselves.
Yeah, absolutely. Gloria, maybe to you, we're talking about sort of downside and challenges that have with the optimisation, but you were speaking about sort of how it's important around that values exchange and how you're really looking at that.
Yeah, so we were talking about, I guess, customer expectation nowadays is, data is used and shared for my benefit. So if I'm handing over my data to you, I expect a values exchange. And for us at Wiser, we think about this in a really micro way. For example, when you first enter the journey to apply for a loan, and you're handing over your data, you want that first impression to be as consistent as possible in terms of quality, in terms of the experience, because that first impression is usually the first and lasting impression. So from the first moment you ask for data, we kind of deem that as a real moment that matters, which is something we were discussing on Monday.
Yeah, absolutely. And maybe Satish or any other panellists, like any other sort of downside or challenges with having a look at that full end-to-end life cycle?
Yeah, I would say, the downside I see is that, there's been too much emphasis on the slick side of the house. So it leads to the middle and back office at times becoming the slack side of the house. I feel the opportunity that lies to be able to overcome some of these obstacles is to have a situation where borrowers could see that, to Gloria's point, that if they're providing data, they get more value from the data that's being provided. So I could have a situation where I'm in a position to drive very flexible repayment schedules or drive very dynamic workflows to make changes to my interest rate calculations. Be able to also make sure that a Wiser could perhaps then be able to tap in and look at the moments that matter with a very different lens to the borrower, right? Or a MoneyCatcher could come in and provide a more competitive offer if you had to restructure the debt, not just come in at the time of origination or at the time of refinancing. So I think the risk we carry is if we keep it too focused on the front end of the house, borrowers are happy up to the time of settlement with all the emphasis that's happening on time to cash and time to yes. That there's not enough emphasis on their other life cycle needs as things happen in their lives.
Yeah, absolutely. And obviously, managing and keeping the customer happy in terms of reducing, I suppose, let's call it the risk of refinance is really important. without giving away the shop, is there anything working at particular businesses? I know, Simon, you were speaking about there's some areas at Newcastle Permi's being around, managing people through that fixed rate cliff that was potentially there. So, any sort of particular things that you want to share that doing from your business?
Yeah, it's a really interesting discussion. We've talked a lot about optimising the life cycle, and I think it's really important that you need to do it through, right from origination through to ongoing management, because customers and brokers are really savvy these days. Everyone wants value, i.e. they want a really good rate. And the risk is, if you're not efficient and you don't have the right funding model in place, customers will just churn, and you spend a lot of time and effort onboarding them, so you really need to be able to compete on price in this market. One thing our business did during the fixed rate cliff, we had lots of customers rolling off ultra low interest rates, the 1.99%. Wouldn't we all love to be on them now? And what we did is we looked at that opportunity. Being a customer-owned bank, it's not always about profits going back to shareholders. The mutual banking model is about giving back to our members in terms of better rates and fees. And what we were able to do with all those customers rolling off really low fixed rates was essentially put them on front book interest rates, so they've got really competitive rates, reduce the risk of customers refinancing away. As we know, lots of data and data-driven exchanges, people are constantly reviewing, which is rightly so in this higher cost of living environment. So that was really effective for us. We actually improved our retention rates for fixed loans over that period, but you've got to be competitive, you've got to be able to compete on price and to be able to launch initiatives like that.
Yeah, absolutely.
Can I just add to that? One of the things is the leading indicator in the market is interest rate for changing. But I think going back to your question of what are the risks, is if a consumer is only being spoken to about an interest rate, they're not aware of the other benefits or costs that are involved with that exchange. So what we look at is full product and pricing policy, and also we leave it up to the trusted advisor, the broker or the comparison site company or whoever it is that is dealing with that consumer under the trusted advisor model to work out what the overall best interest is of that particular consumer. And what we're finding is only about 7% of the customers, we identify that typically around 50% of customers in the book are at risk of being offered a more competitive offer, but we find only around 7% of them actually go on to refinance. And it's the bit in the middle where we provide the education to the trusted advisor around, here's the delta between current interest rate and best offer in the market. What is that in the first year's worth of savings? What does that mean in terms of product and pricing policy? The trusted advisor then knows turnaround times, pain points at that particular... We don't know any of that, that's what they know. They also know the current scenario of the consumer. So the combination of the data that we provide and the intelligence and the expertise of the trusted advisor is where that risk is nullified, so that when that consumer goes to the local barbecue or talks to their neighbour down the road and says, hey, you've got a better interest rate than mine, the broker has stepped in that space, or our trusted advisor, whichever model that is, and they've said, yeah, you can get a better rate in the market, but here's the reasons why you probably should stay where you are, or let me go back to your bank and see if I can reprice you. So we find that of the 50-odd% that we are at risk of a more competitive offer in the market, over 40% of those either stay where they are or don't move at all. And I think that's a very, that's demystifying some of the fearful stats that are being placed into the market around it's all about churn and things like that. It's actually around making sure that the trusted advisor and the consumer work together through the entire buying life cycle of that loan to make informed decisions with all of the data that they need. And I think that bit there is where optimisation becomes really interesting.
Yeah, it's a really good point, and it probably leads in, and Satish, you're probably going to answer this, but we spoke about automation versus human touch and how integral that is. But sorry, I cut you off there.
No, bang on, Craig. I was just going to lead on from what Ruth just said. I think, extending the point about downsides and risks, it's equally important to call out that this point that Ruth made about trusted advisor, I think the human in the loop makes a very important play there, right? Whether it's the broker, whether it's the AR, whether it's the banker themselves. I think digital servicing at times can give you a feeling of digital locker, which means you just have some fancy buttons and slide rules that can give you a sense of control as a user, but what's important is that there's a lot of core platform work that sits behind it, which today is getting more and more unbundled. And that would then mean platforms, like a Money Catcher, like, Wiser and the others, have access to some of that information. And that could then lead to a balance between a human in the loop and technology playing a better role for the borrower.
Absolutely. Yep. Gloria,
Yeah, just to add to that, I think the best technology from a user experience perspective feels invisible. So, for example, when we were looking at how can we extend our relationship with our customers from being transactional, because in reality, getting a loan can be quite transactional once your funds are dispersed. Extending that to have, I guess, an ongoing long-term relationship. So we found that providing an experience in an app, so a consumer-facing app, and allowing them to self-service their loans using technology was a really great way to do that, being able to make one-time payments, but doing so in a way where we knew when it was relevant to leverage technology and when it was relevant to bring the human back in for that personalised journey.
Yep. Yeah, absolutely. Probably just to sort of build on that even further, and we've mentioned a couple of times the moments that matter about, those key events that will happen through that conversation with the customer. Sort of disputes and hardships and those sorts of ones. How is that important, that conversation through the life cycle? And maybe, Simon, if you want to kick that off from a Newcastle perspective, how are you sort of dealing on that side?
Yeah, we've spoken a lot about data and digital and automation and the likes, but there are kind of moments of truth where we found in our experience customers don't want to speak to a bot, they want to speak to a human. Some of those moments are things like if someone's in financial hardship or they've been a victim of fraud, etc. They want to know that a human's on the end of the line and they're taking their concerns seriously and working through the problem and the solution. That's worked really well for us, having the right mix of digital, virtual, and the human touch, as we like to call it at Newcastle Greater Mutual Group. And I think having locals and a local contact centre that is onshore as well has really helped us, and it's really helped us with our MPS and CSAT as well. So it's about having the right mix of kind of digital, virtual, and that human touch for us.
Yeah, absolutely. Any other sort of comments from panellists from a moments that matter perspective? Anything particularly done at your businesses?
I would just say, because we deal mostly in the residential mortgage space, it's really around the moments of, our use case was typically around trail book retention. So actually being proactive when the customer didn't realise it was a moment that mattered, if the rates had moved and they weren't aware, etc. If you actually ask a customer what rate they're on, they typically don't know. They'll say, it was about, or they'll remember the rate at settlement. They wouldn't know what rate they're on now. So I think the moment that matters in that instance is it's a proactive initiation to say, now is a moment for us to do something to see if we can save you thousands of dollars per year. But I think the other thing is where the digital piece becomes very useful, and this is where I think we've got a way to go in being able to categorise and provide insights around CDR transaction data. But now we've got access to CDR transaction data and can categorise that. We can predict that customers are going into hardship before they realise they're going into hardship. And so those conversations can be brought to your exact point. It's very difficult to call a bank and say, hey, I don't think I can pay my home line. You shit your pants. That's not a great phone call to have. So what we want to do is bring that earlier, and so a much more soft conversation can be had as an outreach with the right data to say, we've got some red flags up here, but you could manage that early. So I think that the back to your previous point as well around data drives, it supercharges the interaction between the human and the consumer. And I think even when you add AI into that, or our predictive analytics and things like that, the AI really can't have that emotional, intelligent conversation with the consumer that will make them feel safe. And that's what we've got. Problem around data safety and security. There's conversations around that, and then there's the emotional safety that they need to have, particularly around something the size of a mortgage. And I think the data helps in both of those situations, and they become moments that the customer doesn't even know that they are important moments because we've predicted it, being the specialist in that area.
And I think moments that matter would probably go into a situation where it becomes really a segment of one. more often than not. So you can't necessarily only model all moments that matter. You need to be able to have the ability for giving some power back to the users, so that they can also kind of, in some sense, see a certain moment appearing for themselves. And it doesn't even have to be a hardship. It could even just be having the flexibility to have some interest rate holidays that I want to plan for, right? There are upcoming festivals coming and I want to redirect my funds in a different manner, so I want to get some sort of a leeway from my financial institution for that. So a lot of that will start appearing much more important to borrowers, and that will only happen when, a lot of platforms like ourselves actually start talking to each other in a lending value chain.
Yeah, absolutely. No, thank you. But we'll sort of tie it up in a moment, but there's some really nice things that are coming through, that lovely balance between automation and the human touch, and it's great to hear that, especially, what would be better than somebody actually reaching out and go, do you need a hand, in terms of that, that hardship side. Fantastic. So probably just to wrap it up and just go through the panel, maybe starting with yourself, Satish, hearing all that and the work that's been done around optimising the customer life cycle, sort of what's the return into the business? And it doesn't have to be necessarily tangible. Ruth mentioned some key stats there, but anything else you're seeing as how the businesses are really reaping the rewards of really getting that optimisation correct?
I think the matrices around cost to serve and time to serve will become equally important. I think we've had a lot of measurements that tend to happen for time to cash and time to yes, which is fantastic. I think borrowers needed that level of digital impetus in the front of the house. I think those two markers in the back of the house will start becoming important for businesses to also measure how they're responding to their borrowers.
Yeah, fantastic. And Ruth?
I think besides the obvious measures of retention of revenue and new revenue, I think the next one is productivity. I think optimisation equals productivity, because you prioritise the effort of your team on either the most vulnerable or the most lucrative transactions that they need to focus on. And then I think that's the byproduct of that is either retained revenue or increased revenue. But I think the productivity piece is, and we've got a productivity problem in this country. I think this is where optimising all of these kind of things with technology and combining that with the human intelligence on top of that means that we improve productivity.
Yeah, nice. Simon?
Yeah, I think for Newcastle Greater Mutual Group, for us, it's really about getting the borrower life cycle right, is helping more Aussies into homes, and being able to pass those productivity and efficiency gains back to our customers in the terms of better rates and lower fees, so we don't have our customers being churned with all the data that's given around constantly searching for new rates. So it's really just being able to help Australians in the homes and the communities that we operate in really thrive. So that's it for us.
Definitely. User experience.
I think just to echo what everyone said, I think it's also really important that optimising the customer life cycle enables you to be really honest about your metrics. NPS, obviously, as a really fundamental metric, can sometimes be a vanity metric if you're kind of measuring it at a certain point. But really knowing your life cycle and knowing how to prioritise where to optimise allows you to have genuine metrics throughout the life cycle, throughout the various journeys. Very excited.
Great, thanks, Gloria, and thanks, fellow panellists. Thanks for the conversation this morning. Enjoyed our time earlier in the week as well. So thanks, everyone. Thanks, everyone, for joining us.
Thank you. Thanks, Craig.